Hello guys, we just saw the price going to 93.5 and I thought that I might as well do an update on this, on how many things are changing. I'm seeing some very interesting developments that I want to share with you. It's worth mentioning as well that today's video, the main video, is still worth watching. It's full of the main alpha, and in this video what I'm gonna do is I'm going to refer to the things that I say in that main video as a follow-up if you want. Number one, on the aggregated open interest, I want to clarify a few things that I have just noticed. Number one, on the 5th of August, when the price went to 49k, that is the moment where we saw the open interest going below the support of 15.7 billion. We've been monitoring this similar event here at the beginning of February, where we also lose the support of 29.6 billion. And the idea is to see that the open interest comes back inside the range and starts going back up towards the top of the range while the price is still somewhere at the lows. And we are seeing that effect, but there is a few things that if I wanted to be really picky with this potential incredible bullish signal, I'm gonna challenge it tonight and I'm gonna say one thing that could make it fail. Just bear with me and I'm going to explain it. On the 5th of August, the price went to 49k and we got the pinch of the open interest. That is our signal. That is the moment where we break the support. Then around 13th of August, we reclaim the support of 15.7 billion. Open interest shoots back up to 18, more or less the middle of the range of the open interest, and comes back for a retest around 7th of September. So the whole event is 1 month. At that point, the price puts a higher low at 53k. This doesn't show it because these are candle closes, but the 5th of August went to 49k. So therefore, this low is 4k higher than the low of 4th of August, 1 month after. All right, as you can tell, we got a confluence of what price and open interest did, right? We have a low on the 5th of August and we got higher lows both in September for open interest and for price. So just to keep this in mind, I'm gonna put this symbol there so you remember that both are going up. And in this case, we can see that we are pinching in here on the 6th of February with prices around 96k. We are now reclaiming and coming back inside the range, and open interest is shooting back up into 30.5 billion from lows of 28.6. So open interest is doing what we want, but we are seeing now the price putting new lows. So my question is this a result of the shorts taking huge positions in here? That's question number one. Question number two, is that something positive for this setup or something negative? It could be positive if we thought, okay, shorts are going mental here and increasing the open interest as the price comes down, and that's because they are going all in a short, expecting prices of 80 and even 70k with high leverage, in which case this could be the perfect recipe for a short squeeze. But at the same time, this could also be longs entering too big in here and making things worse. So I think we need to zoom out, or actually zoom in, and see a little bit more of detail on that to absolutely assume that that setup in fact is the same as in August last year. Okay, let's look at what happened on the 4-hour. I'm gonna investigate a little bit more on the open interest there. I'm gonna look what's going on, and you know, I've been saying for the past few days that longs are entering big at the moment. So it could be the case indeed that these are extreme amount of longs entering here, and this is giving me doubts of whether I should be still comparing these two scenarios as the similar scenario and that I should be expecting same results. Anyways, that's just one data point, one signal, not the only one longer term bullish. So I'm gonna just park it there and focus now on what's going on with the 4-hour and an update on what happened today. Number one, the 4-hour broke down from this level, and I said we cannot rely anymore on the 4-hour because it's been faking out constantly. At least 4 or 5 signals on 4-hour breakouts were completely BS. And from the 16th of February, this breakdown was an actual so correct signal. It was telling us we're going to break down from here, and we were still in the middle of the range at 96.2k. After that, broke down, came back in here to test resistance on the RSI, and today earlier we tested the trend line at the top, just like we did also on 17th of February and we did on 14th of February. This is the third time that we pinched that line and we couldn't hold, not even with the resistance of the price, and that's how we end up finding ourselves pretty much at the bottom of the range, a little bit further, and we can get there and touch the PNR. The global support is actually at 18 if we wanted really to fully reset the 4 hour. So from 27 to 18 is how low the 4 hour could go to fully reset. So I'm gonna place those levels in the price. 27 is 93.3, and as you can tell, we have already pinched that level. So at some point the RSI in the previous candle was touching the PNR, so we can consider that already done. The next level for a full reset of the RSI is 90.5. That is if we pinch this level in here, similar to what we did on the 2nd of February. Now we shouldn't be just looking down and thinking price must go down now because things are bearish. We should place a line like this and start looking for a potential breakout as well. We could rally back into resistance at 51. Let's place this number in here and let's see where is that in the price. So resistance at the moment is 96.2. That's the same number that before we were holding, and that is a rally into this white line. Of course, for the breakout, initially we need to break beyond 39, and that I think is pretty easy from where we are. That means the price needs to go beyond 94.9 at the moment to initiate a very early breakout in the 4 hour time frame. Let's go to the daily, and remember that my biggest frustration was to be trapped into this pattern, and we might as well end up the day back above 94.8 or 94.9, which is the area that the 4 hour requires to start breaking out to the upside. And that makes a lot of sense because that could bring the daily to close back above the same stupid pattern, and that means that if we close somewhere in here in the price, we could be heading for another journey to the top of the range. Why? Because we are recovering the same trend line, right? We are coming back into the previous micro range. I call it micro range because the actual range based on volume is from 103.7 to 90.7, but we have also this small pattern that got us trapped on the 6th of February, and if we come back inside holding that 94.8 on the daily or breaking out on the 4 hour in here and confirming a 4 hour candle close like this, we get the potential to go into resistance, or even better, to break out to the upside. Watch out, because this is not a forecast. I'm not telling you that we are going to break out. Wait for the price to do it. This is still a falling knife, and we don't know yet if it's gonna meet with the global support in here, if it's gonna test the PNR as well. There's a lot of work to do there that could happen overnight. The right thing to do is to wait for that breakout on the 4 hour. On the weekly, we also have some developments thanks to this new price action. We are at the weekly support. This line 93.7 is the last line in the sand for the M pattern on the weekly to produce a breakdown. The target is 80k. That's the technical target, and notice that when I say anything is the technical target, I hint that sometimes Bitcoin loves to disappoint people waiting for technical targets, and instead of going there, doing half of it, doing just 1/3 of it, and then shooting back up. Particularly when the breakout starts, too many shorts enter late, things start balancing out to be more profitable for market maker to punish the shorts. Once the balance says, okay, it's worth going up, not going down, then we should back up. So watch out for that. Not saying it always has to happen, but take my advice. Technical targets on higher time frames on Bitcoin sometimes are just food for the fools. On the weekly as well, now we are testing my hypothetical channel in here, at least the support band and the lows that I have built manually connecting these two pivots, and now we are testing for the third time a potential new pivot somewhere in there. So I'm still looking for eventually seeing some sort of reaction in here in a rally into what we should be expecting at some point becoming a new pivot to form the full channel. I'm also waiting for this potential bull cross coming on the stochastic public RSI. That's on the weekly. I also want to mention something extremely important that I don't know if you have noticed, but we are in a topping year. What the hell means that? Where if you look at the price action on Bitcoin with yearly candles, you're going to notice that we get 3 years green, 1 year red. This is the bear market candle, and then 3 years of a move up. In early times in Bitcoin, the topping year, the one that precedes the red candle, the topping year has had most of the movement up. That applied to 2013, 2017, and then in 2021, we still had a green candle on the topping year, but you can tell that it's kind of a sad version of the previous 2 cycles. It does feel like something was lacking there, and everybody noticed that. We went to 69, but we ended up closing the year at 47, and the body was very small, and that is what trapped most of the people expecting 150k, because everybody was expecting a candle with similar proportions to this, with diminishing returns, but not that smaller than the previous ones. And now we are in another topping year, and we still have a few minutes before this candle turns back into red. And I'm not saying necessarily that this is the end or anything like that, but we are in the second month, and typically in the second month of the topping year is where most of the things are happening, including in 2021. And now we are in the second month and everything is kind of quack. All right, let's stop moaning and let's go back to the short term. CME, I still believe we have a CME gap at 97.5 to 97.2. That is the premium on CME. Let me show on Binance where is that gap as well. I will say is somewhere between 96.989 and 97.177 to be very precise. Going into liquidations to continue to cover what's going on at the moment with this retracement, you can see that my thesis in the earlier video today of the short term not looking great, particularly because we were hovering around here trying to form some sort of double bottom formation that never broke out, and it was kind of doomed to fail. I should have been a little bit more extreme when I was talking about this, but anyways, I hope that no one entered in a long with this double bottom formation, because really was just trying to trap longs. As soon as they complete the pattern, they went straight for this liquidity. I even explained that this green was gonna make it a lot easier for them to initiate the cascade of liquidations. They went straight into 93.370, and they have left so far this 93.1 that is in the red. That completes this move of the flag that you can see in there is perfectly proportional. I will have really liked that this wipes everything, exits, and has a V recovery to the upside if we want confirmation that we are really going for the top of the range and initiating now some love sharing with the guys that are here at the top, which really deserve some love as well. Everybody does. Long-term liquidations at 92.2 at the moment are interesting at the same proportion of the ones that are at the top, but of course the top is a lot more dense. That's why you can see the cumulative in the green line increases and increases a lot faster. On the lower end it goes to 91.5 and then it declines massively, because we haven't been in the past 30 days in this area. That's why this particular chart doesn't show any liquidity there. And you can see how they got liquidated at the targets we were talking. Things started from 96.2 and we went all the way to 93.2, liquidating plenty of people for over $1 million. We saw the extreme of leverage on the longs in here in red. I shared that as a data point that was quite bearish for the short term. We look into the past and we saw that sometimes it doesn't play out, but anyways, pretty much 80% of the time it's closer to a move down. Now what we are seeing is that the longs are stepping in pretty aggressively. We have levels of longs of 72 which are higher than the 11th of February. On 11th of February, this signal led into a move up of 4%. The bidding continues to increase in here as the price comes down. We have had a high of 17 on bidding. That means that there has been loads of limit orders below the price in here with the interest of buying this particular dip. 18 is not a really big extreme, but is very close to trigger my filter of being beyond 0.2. By being beyond 0.2, you get these green lines that, as you can see, are most of the time flagging local tops, and that's why I care. We've been at 0.18, so pretty close to triggering another buy signal. Shorts continue to be the ones at risk, but now they have increased their risk. This morning it was just 100k, now it's around 300k, so things are becoming a lot more interesting. And you can see in here how many longs got liquidated. It's not that much, it's more or less a routine liquidation event, nothing compared to the 3rd of February yet, and that was enough to reduce the amount of longs. And as a consequence of this move down, we continue to create new fair value gaps. Now we have one that could attract the price back up to 95.3 to fill the imbalance. This doesn't mean that right now we need to go for all of them. Price could continue to free fall and create new imbalances depending on the speed of the fall. This number reminds me that that is my entry with my initial order, which is now underwater by 1k, and I'm hoping that we can do anything like this and then go for the 101 to take some profits, or if we can go to any other area of interest around here so I can average down and increase my risk as well. Alright guys, I hope you appreciate this update. This is not the night update, it's a little bit longer because I wanted to make sure that I'm sharing everything that is going on with this. Some days I can just cover the RSI and the liquidations and do an update in 5 minutes or 3 minutes or whatever, but some other days I want to share my train of thoughts and try to spot how low we can go or what early signals we can get to get us out from the downtrend as well, which I have done and I hope you appreciate. If you do, hit the like, write down a comment down below. As usual, that always helps the channel to continue growing. And thanks so much for all the comments on my haircut. Even the trolling comments made me laugh all day. There were some very funny. I'll see you on the next one. Bye bye.